I'm James Sweeney with ModernWallStreet.com, and here I am with an exclusive interview at the New York Stock Exchange with someone very well respected here at the New York Stock Exchange, and someone I can also call a personal friend, Brian Barnier of ValueBridge Advisors. Brian, thank you very much for the time, and how are you today?
Hey James, glad to be here. Doing great.
Glad to see you too. Now let's just get down straight to business. Now you're usually focused on the institutional investor, but what similarities do you see within the individual investor?
Well, the big similarity is that they both have a long-term horizon, right? If you're an insurance company, a pension fund, you got to think long-term, and so does a human being think about over their life and everybody they're providing for. But a person has stuff going on in their life, right? They've got to worry about getting sick, family member being ill, elder care, special needs child. So they have all those real-life things that go along as well.
So that distinction, it appears to be scope, like personal situations over a lifetime, am I correct?
Right, exactly. It's thinking of themselves more about as being a business that actually does stuff, where you've got trucks out on the road, you're making things and producing, rather than just, you're some investment company here on Wall Street.
Okay, so what exactly does this mean towards your approach for the individual investors and, hey, yourself as well?
Right, so it's about the small business of me. If I'm thinking about all those things happening, it's like if I own an ice cream stand or my grandfather used to own a Dairy Queen. I mean, that's the stuff that goes on, right? So when I translate that into financial terms, it means that all this stuff we see out here happening about risk in asset accumulation land changes. It's not just about volatility, it's about liquidity risk. That is, having money available at a specific time in a specific quantity. And then how I use that to manage the risk in my personal strategy, and importantly, my capacity or my ability to take risk. Those are the two financial things that are very, very different.
You mentioned the background behind us, so here's a question regarding the surroundings currently behind us, or the stock exchange. Let's take that into consideration. Equities, as we know, are traded here on the floor of the New York Stock Exchange, and how exactly do equities play into such an approach?
Right, so the thing is, when people are just looking at safety, they try to go to bonds, and in particular not bond funds, but they buy individual bonds. But remember, they've got default risk, they've got their own liquidity risk, currency inflation, all that sort of thing. So these come in here because they're part of that strategy for growing in your personal pension fund, if you will. But you've got to look at it differently, like liquidity risk. And one of the great things here about the exchange, we see all these human beings down here, the market makers, is that you can manage that downside better if you break the stocks into two categories. Those that are big cash flow paying and those that are growth companies. And use that as a way to get yourself to a better liquidity adjusted rate of return. So it's a big mouthful, but it's a big difference to not just be shaken around by the volatility like traders, but to think about it in terms of your real life.
So I know that all of this great stuff you're talking about, you teach this to investment advisors. So give yourself a quick plug. What's the program in which people are going to go ahead and learn this?
All right, so the group that I like working with most is the Retirement Income Industry Association. And the reason I do that is because they're very cross-silo. They cross advisor types, cross company types, cross life cycle stages, young and old, retirement and all this. I contribute to their curriculum, so here's the full disclosure part, and volunteer to teach for them and things like that. They've got a webinar series coming up, or all year long, 2 months, 2 webinars per month, and I'll be teaching April 2nd.
All right, so here's the last most important question. Someone like myself or the average Joe in the street, can the individual investor learn this directly?
Sure, anybody can sign up for the webinar series. Now, they're intended for people earning the Retirement Management Analyst designation, that curriculum, but anybody can just go sign up and watch it live.
Brian, thank you very much for your time, and good to see you as always.
Glad to be here.